Hello, everyone, and welcome to Smart Investing. I'm Albert, your host of the channel, and today I'm going to be doing about 7 banking stocks. So, again, the banking services sector is pretty similar to the banking sector. They're pretty much the same thing. So in case you're wondering, you're going to see a lot of the same companies for the same sector. So let's begin. Like always, I'm going to be using Webull. And for the first stock I have up is OPOF. So we can see here, I'm going to be doing a fundamental analysis and a technical analysis. So let's look at some fundamentals here and a little bit of technicals. So obviously the price is always the biggest concern. We have here a price of about $26. The volume is about 5,000. And again, we're after hours, so markets are closed. They closed at 4 p.m. Again, today is April 21st, 2022. I'm on the Eastern Standard Time Zone. It is 9:02 p.m. So, with that said, we have here the price of $25.96. And as you can see here, 52-week high and low of 28, high of 27.99, but rounded off by a penny off. Down by a penny, but pretty much it's 28. So we're looking at an $8 difference for the whole year. Now we're looking at turnover and then the average volume. That is still pretty low. PE ratio slightly overvalued or fairly valued, if you want to say that as well. But as we can see here, if you invested in 2020 for the start of this year, you would have gained only, let's see, so even if you invested at the bottom $12 all the way to, let's say 24. So about this price then, $25.96. But anyways, even with the ups and downs for that month, it would have been about 25. So anyways, what I'm trying to say is that's not a lot. I don't think that's a lot. But then also, if you invested at the top, even if you invested in before 2020, the March crash of 2020, you would have broke even or close to breaking even. As we can see, the max for this stock, very volatile, and basically I've never seen a volatile stock like that within the first few months. As you can see here, look at all that volatility right there. That's a lot. So for short-term play, I do not like this. If you even think about investing in this stock, I'll stay away from it. Let's dive deeper into a fundamental outlook. So we're looking at the total revenue and the net income here on Webull. So we have a net income of about 8.44 million. Total revenue has grown. You can see that. So we have here debt at around 90. Again, that's typical for a bank. Dividends. Now let's look at dividends. They have raised their dividend by penny. So we can see right there. And then we can see also the split. Let's look at some splits. Last one is 2007. The one before that was in 2002. That is a really high number, 5 for 4 and 3 for 2. So anyhow, we're going to look at the market cap. I don't think I said that in the beginning of the video. We can see here 134, pretty much $135 million for the market cap. And it's just not a big company. Very, very small. Again, let's look at the 5-year chart. And you just broke even. It's just not a good stock. It took that long to recover, so I'm gonna say no. So moving on to the next one, WVFC, WVS Financial, and the ticker symbol is WVFC. This is on the NASDAQ. So we have here a volume of 6, which is really, really low. 52-week high and low of $15 and $17 pretty much. $2 difference. Awful. Fundamentally and technically, I don't see it. Earnings are crap, to be honest. They're not even earning $1 per share. We look at the 5-year chart. Looks awful. I don't even like it. It's gone up. I mean, so many stocks have gone up like during the past 2 years, ever since 2020. So with these insane prices, you would expect it to outrun, the previous years from 2018, 19, and the beginning of 2020. So definitely a bunch of stocks have beaten the 3-year previous price points. So we have here just a $2 difference between the 52-week high and low. So again, it's awful. Now, fundamentally, I really don't want to look at this stock, but I'm going to do it anyway. Let's look at some financials. Again, I don't like looking at the quarter. I like looking year for year. That gives me a better outlook on things. So as we can see here, overall for the year, they have gone down in revenue and net income. You can see here that drop. You can see here that drop in net income as well. So it does not look good for this company. Obviously, high debt. They like to do that. Dividend, they have faced dividend and a special dividend in 2019 and 2018. But they have not raised the dividend. And then we look at splits, no splits, but still dividend payments have been flat. This is a stock you want to stay away from. So let's look at the next one. Again, I apologize for my lighting. I sincerely apologize for that. It's tough for having a married life and a family. So, sometimes you don't get the privacy you want. But, again, you just got to do what you got to do to get some privacy. So I'm actually in my wife's car doing the video. And I thought I'd show my face, because, again, this is the brand for my channel now. So I like showing my face to match with my voice. And again, when I first started the channel, I wasn't showing my face because of criticism, to be honest. And I know people like to criticize more than to give good feedback or compliments. So that's one of the main reasons I didn't want to show my face when I first started. But again, for the quality, not for the video or the sound. I mean, I know my quality for sound and video is okay, but it's the information and the research and the feedback I can give you guys that is very valuable to you. And again, high accuracy and high quality as to what I'm giving you. So again, I know what I lack with the higher I could do better with the visual and the sound, but again, I hope I make up for it for the knowledge part that I can give you guys. So hopefully you guys can like, comment, or subscribe for the video, and I thank you guys for watching, even if you don't watch the full video. So I encourage you to watch the full video because it just helps you learn more. And again, you could always speed up the settings on the YouTube channel so that way you can listen to it faster. And it is recommended for a 1.5 speed or 1.25 speed. So again, so we have next SBNYP volume. I'm comparing it to the average volume. It seems okay. So 52-week high and low, a difference of $8. The company is a $575 million company. And it has very low turnover, which is good, a low turnover rate. So technically and fundamentally, this looks like a good company. But let's dig a little deeper. So technicals don't make sense for this company. I mean, the chart is, fundamentally they look good. Technically, they do not look good. So, how can we evaluate this company? Is it even worth it? So again, technically the chart does not support it. I mean, ever since it has broke down for 2022, it has not recovered. Let's look at the 5-year. Oh, this looks like a new company. So I'm trying to go back to the previous price points in the years prior, but I don't have anything. So I'm just going to do the 1 year, and you can see there, price has been flat ever since. And going into May is a really tough month and a sell month typically. A lot of people can debate me on that, but to each their own. And typically it is. And May for this year, I think we're gonna go into more of a bigger sell-off, if that makes sense. What I mean by that is, I don't think the stock market is gonna crash like right away, but there's gonna be a lot of stocks, well, more than normal. I think there's gonna be more companies, big companies, to follow that are gonna drop even more. Their numbers and stuff, their price points. So just be careful with that, because I think May is really gonna hit hard. So anyways, moving on, I thought I mentioned that because looking at the chart, it's crazy. Like fundamentally the company looks good and the valuation looks good, but technically it just doesn't look good. So 2021 dividends look okay. They slightly dropped from 2021. So they paid out earnings of 36 cents, and then they dropped to 31. But ever since 2021, they've been pretty consistent paying 31 cents. So that's not too bad. This company is fairly new, so I would not expect a split as soon as this company has just released, not even a year or about a year. So that's going to be a while. So anyways, I'll stay away from this company just to be on the safe side. The numbers don't support it, and the volume doesn't support it, and we're in a downtrend anyway. People might debate it that say, wow, this was a stock that was holding on pretty good for a long time, and that's true at $26. But during a downtime, it has not held up. It just kept selling off. So if we look at the chart, as you can see here, that's a big drop. You had a drop here. So for January, then it ticked up, but then it dropped again even more. So we had one drop, another second big drop into February. Then March was a little bit of a gamble with the up and down volatility. But then in April, it dropped down again. That was another big roller coaster drop from $22 all the way to like $20. I know it doesn't seem like much, but the charts support it. Just looking at how big these lines are, those are big lines. Those are big drops. And that's pretty obvious. So again, I'd stay away from this stock. So let's just move on to the next one. So the next one up that I have is HVBC. So let's move on to that one. Very volatile. I don't like the volume. I don't like the numbers. 52-week high and low for the difference of about $5. And that's for the year. Yeah, that's horrible. That is definitely horrible. Excuse me. I apologize for that. Just getting a little tired. So anyhow, looking at the 5-year, let's look at that. So it has broke the 2020. It stayed flat. And it has held up pretty decent. Now, let's look at the company. Let's look at the financial data for that 2021. So, wow. That's a lot of revenue. That is definitely a lot of revenue compared to from 2019 all the way to 2020. And then 2019 net income. But in 2020 to 2021, you can see it kind of got lower. Sorry, I didn't draw the line perfectly, but right around there. So it's dropped some of their net income from 2020 to 2021. But even then, they had a decent 2 years. I mean, there's so many companies that were really worthless before 2020 that now they're just superstars, and they have gained so much of their valuation just because of the price on the stock market. And that's how it works. You can have a crappy company, and if people support it and the price goes up, then it's just a big winner, We live in crazy times, and people believe in crazy stuff. So, the past 2 years, the stock market, to me, it looks like a casino. It's a lot of gambling. But again, you have few people that actually want to invest and take this more seriously, such as people like myself. So let's look at dividends. They only paid in 2018. That was the last time. So they are not consistent in paying dividends. Hopefully that is a good thing, because if they can't pay dividends, they can use money that they're not paying in dividends, and hopefully they can grow the company and basically do buybacks and whatever else they need to do to improve company earnings and revenue, especially at a time like this within the last 2 years where things have been falling apart and just, completely going downhill, as some people like to say. So for HVBC, it's hard to say. I don't know if I should say it's for a watch list. I'd give it yeah. I'd say yeah. It'll make a decent watch list. You can add it to the watch list. It's a very, very small cap company. When it comes to banks, Wall Street doesn't like small companies like that. It's rare for them to like small companies, especially in the banking sector, because they're so big. But then also, I have to consider that Wall Street does like to move money around. Again, I don't know when. I don't know how often. It just depends on what's going on in the market, really. I mean, because they do so many uh, active strategies, you know? Sometimes they'll support tech stocks, or they might favor large caps. They might favor like gold. Uh, it all depends. They're just so random like that, and so many firms support different strategies and different systems and processes. So again, it's hard for me to keep up with all of that, but I try to do my best to keep up with it. So yeah, I just thought I'd say that because things are just crazy with big money, and then also smaller money and the mid-sized money. It's hard too. So it's just that's the way the stock market works. So everybody just wants their fair share. So yeah, I'll give it a watch list. I say yeah, this is a pretty decent watch list. So next one up, I have GLBZ. So we have that. I don't like it, but I could be wrong. Small market cap, 52-week high and low. I don't like. Earnings seem okay. They pay dividends. The yield, I'm looking at that. I don't like. Whoa, that's a lot of splits. So I'm automatically going to say no. But let's see what their numbers are. So in 2021, they have grown, and their debt is really high. So I'm going to say no to that stock. So I'm just going to move on to the next one. 2D5. This company is not on the U.S. market. As you can see here, credit acceptance, FRA, that is not a U.S. major market index. Even though they are a $10 billion company. FRA, to me, that looks like France. I could be wrong. I'm guesstimating. If I am incorrect, please correct me. And as you can see here, look at that flat drop. It almost looked like nobody was even invested in this stock at all. Look how flat that is, and all of a sudden it popped up. And now it wants to get active. So not only is that very gutsy and ballsy for somebody to invest like that, and then you don't know if you're stuck with the bag. You don't know if you have, if you bought this at this flat line for all these months, you took a really huge gamble, because it's like you were stuck with your shares. You never knew if you had anybody to sell your shares to. There was nobody to sell your shares to. So, I mean, whoever decided to buy this stock had a lot of balls. A lot of balls. And look, all the way from April of 2020 till now. Look at that. Look at that flat line. I've never seen this in my life. I have never seen this even before investing, even looking at the stock market. I've never seen a flat line for such a long period of time, for that long. I've never seen it. Never, ever, ever. But I don't know if other major market indexes work like that, but that is very odd and strange to see that, and very, very gutsy and risky to do that. That's something I would expect from a OTC market. So anyways, you got a big dip. Well, money-wise, it is a big dip, but chart-wise, it's not a big dip. And then it just went back up again. And, you see January here, right? Then it started to dip. And then we had the March bounce all the way till April now. And now, it might have a small dip. But again, still, we had a big run for this stock. Jeez. So somebody took a really gutsy call on that one. I wouldn't bother. I wouldn't even look at it. So moving on to the next one, I'm going to say no to that stock. So we have ZIONP. So again, that was the drop for that stock. So I did go over my 7, so I apologize. I'm just tired. So there we have it. I'm gonna leave it at that. I'm gonna thank you guys for watching. I know I took kind of long, but I hope I got some valuable and encouraging information for you guys. It's late. I'm gonna go drink some water. My throat is getting dry actually. But thank you guys for watching. Stay tuned for the next video. I'm gonna do that one tomorrow. I don't know what time. Again, I don't have certain days and times that I post videos. I post them when I have a chance. So thank you guys for bearing with me. But again, I can assure you I will try to post at least 2 to 3 videos in the week. So hopefully, I can have more activity. Whoops, sorry. I had my my lights here. So hopefully you guys can stay tuned. And again, thank you guys for watching and bearing with me. I will see you guys in the next one. Thanks a lot.